Good afternoon or good evening, ladies and gentlemen. This is Barry Norman on behalf of ETX, and welcome to our quick little run through the economic events of the week. Now, we do have a very interesting week coming up. Starting today, we have the French elections, as you all know. So before we get started, let me read you our risk warning that I've got to read since we're a regulated provider. Trading in the financial markets can result in the loss of the amount invested. Do not trade with funds that you cannot afford to lose, and seek advice if you do not understand the risks. All information is provided in this webinar is for educational purposes only. ETX Capital and the presenter, that's me, are not financial or investment advisors, and we do not recommend any securities or instruments of any kind. Any securities or instruments that are mentioned tonight are for educational purposes only. Now tonight we will be mentioning a couple currency pairs. We'll look at gold and we'll look at oil. But please do not think this is advice. I am not telling you what to trade, nor am I giving you advice. I'm giving you information that you might want to use in making your own trading decision. Now, for those of you that are joining us through the internet and don't know that much about ETX Capital, we're a fast-growing financial services company based in London. We are authorized and regulated by the FCA, the Financial Conduct Authority. And we also are a member firm of the London Stock Exchange. When you trade with ETX, you can use our ETX Pro, Trader Pro, our web-based trading, to trade commodity stocks, indices, you name it, you can trade it on our web trader at the lowest spreads. If you're in the UK, you can do spread betting. Elsewhere, you can do CFDs. You can trade Forex stocks, whatever you like. If you're more advanced and want to trade on the world famous MT4 platform, we also have that available for you so that you can add on all the expert advisors and use the advanced charts. No, there's no charge for any of the platforms, any of the services we offer. And then we also offer our ETX binary options platform for those of you that want to start out at a lower level of stress and start learning the financial markets. Now tonight, we're going to be looking as much in detail at the economic events on the calendar this week. And then we're going to look at, well, actually, I've got next week's, the week following after this week up, but that's dead center in the middle of a month, so there's not really much going on when we get that well into a month. And then for the U.S., we're getting up to Labor Day. In the UK, we have a bank holiday. So we have some odd and end things going on here over the next few weeks that should keep the markets quiet, but we have a lot of interesting things going on. Like I said, today we are looking at the French elections. And the other big event this week will be the Bank of England meeting. Now, as all of you know, we have Ms. Le Pen against, and I don't know how to properly say his name in French, but the young little 39-year-old new possible, most likely, winner of this election. Now, the French presidential election results today will dominate the agenda for the week. But we also have the Bank of England's latest meeting, at which discussion should focus on recent strength of the pound and the improvement in UK economic data. And of course, we're all going to be starting to look at the upcoming June elections, although it seems like Theresa May and her party are picking up lots of seats. So they should have no problem dominating the election. And then we're going to go straight into Brexit. Now, as far as we look on the stock market or on the share market, we have very little on the calendar this week. Earnings season has begun to wind down in the U.S., but we do have some full-year earnings in the U.K. from BT, British Telecom, as well as half-year numbers from groups like Compass, Broadcasters ITV, and Housebuilder Barratt's Development, which will give you a little bit if you trade stocks. And if you're looking at trading some stocks in CFD, there might be some opportunities here. But as you can see, we only have a few announcements on the board this week. On Monday, we have virtually nothing. Tuesday, we have Walt Disney, and then we have William Hill, for those of you who like to watch the casinos in the UK. On Wednesday, we have TalkTalk, we have Compass, and then we have Barratt Developments and National Express and ITV if you're looking to trade stocks. Thursday is the big day with BT. We have Macy's at the US. And then on Friday, we have JCPenney, which should be a very bad number. Okay, so the big one this week is going to be BT. Now, BT's going to be very glad to get past this year. They've had a lot of bad problems this year. They had the Italian fraud scandal, which has rocked the firm, and then they had pension problems and problems with regulators. So also the year ahead could be a difficult one, given that it faces competition from resurging competitors such as Vodafone and Sky. And they're also stuck in the middle of the Brexit thing. So we are expecting earnings per share, EPS, are expected to come in under pressure, and even they might miss expectations. But we're expecting PE, profit earnings ratio, to be 11 times forward, so it'll be all right. Now, BT shares have steadily declined all year, and the gap down in January took them below 300 pence. A rally in the March brought them back up to 350. So we might see something about a 321 target and then onto a 340 and a 350 zone, recovering some of last year's losses. So we can see on the chart that BT has been steadily all year since January 2016, declining steadily. So like I said, they're hoping to get this year past them. I think we've hit rock bottom at 300, and we're probably ready to see a gap up, especially if their numbers aren't so horrible this week. So you might want to think about taking a position there, but you have to carefully decide what you want to do. But they're at a very low price, so it's a very nice offering. If you're looking at investing and buying up shares, you might want to buy them, put them away, because in the long run, they will recover. So it might be a nice thing to buy at the bottom to sell later at the top. So just think about it. But let's go over and now look at the events day by day that affect the currency markets. Okay. So as we said earlier, we're going to start out with the French elections. And on Friday, we saw the CAC finish up for the week at 5432, and it's sticking close to its highest level since 2008. And that's because the markets are sure, even though with the hacking of the French politics, that, you know, Le Pen's going to lose, and Marsan was holding on to a lead at 60%. So I believe that the most immediate effect of a Macron win on Sunday would be a concern of growing populism in Europe. So we're hoping that he's going to show us a new young politician, but one who isn't anti-Eurozone, where if Le Pen surprised us like Donald Trump did, we could see some craziness out there. So the first round of the French election, the euro surged against the pound because Theresa May was calling for new elections and announcing the Brexit. And at the same time, the euro surged because they got some confidence that we had a good chance that Le Pen would not make it. So if Macron wins and comes out, and he came out in the top of the debates, the euro is, since the debates, the euro has been steadily gaining. The euro has been trading higher than it's been trading in quite some time. Now, they're making, economists speculate that the triumph for him could lead to a boost in the single currency. We probably will see a slight rebound in the euro, especially against the US dollar and the Japanese yen in the upcoming days. But that's only how, if the election turns out like we're talking about. This in turn will send the pound down, leading to speculation as recent gains were short-lived. The pound is a toughie. It's so subject today to headlines that it goes up and down depending on what the Eurozone says, depending on what Theresa May says, all based on Brexit calculations. And then, of course, this week we do have lots of things coming from Mark Carney and the Bank of England. But back to France, if Le Pen wins, God forbid, and I'm sorry if some of you are out there, Le Pen, supporters, I just don't like this kind of politics. I don't like Donald Trump's kind of politics. I don't say whether they're good people or bad people, but everybody wants to undo everything everybody else did, and it's killing the civility of our societies. And she's a worrisome, just like Trump is. You have no idea what's coming next. But the big fear for analysts throughout the election campaign was the possibility of Le Pen emerging the victor, which could see a dramatic weakening of the euro on the potentials of and we're going to call it Frexit. That's a tough one. It's not like Brexit, which is easy to say. Well, we were calling it Grexit just a couple months ago or a year ago. But if Marsan does indeed win, as the poll suggests, this could have consequences for the long-term strength of the pound. We expect to see volatility in both currencies over the weekend as the election reaches its conclusion. Now, Marsan would be a good step in the right direction for the pound, only because he's not going to be a hardcore, he's not going to push for a hard Brexit. He's a finance and economics man, and he's going to push for what makes sense. So it would be nice to have him in the second biggest economy in the Eurozone. Now, a major part of Le Pen's campaign has been her promise that she would still hold a referendum on whether France should stay in the Eurozone within the first 6 months of her presidency. Should she be elected. This would mean that the French would depart from the euro currency, which could cause chaos for the stock markets. You know, the UK caused enough upset, but the UK, the fortunate thing is the UK maintained its own currency. So there wasn't this big uproar, which would be if one of the majors in the Eurozone and the ECB were to leave. That becomes a lot more complicated arranging this departure. So we can see that the euro has climbed well over 109, and it is the highest it's been in about a year. Now, there has been the biggest concern about investors in recent months, and on today's question, is the French vote, okay, as we talked about. Now, the euro traded in a range for most of the week, but still managed to post a fourth consecutive weekly gain. 4 weeks it's traded with a positive number. The pair broke higher towards the end of the week and has taken out considerable resistance. Friday's break higher in the pair materialized despite a strong U.S. jobs report. And, you know, the U.S. created 211,000 jobs, far exceeding the expectations of 185, and unemployment fell. Okay, wages per hour met the expectations, and we had an upward revision to the prior months, but it still didn't give any bump to the dollar, which was a very surprising response. The market seemed to kind of ignore it. So Friday's break higher in the pair materialized despite the strong U.S. jobs report. The unemployment rate improved to the lowest rate seen in decades, and the headline increase was way above expectations. Average hourly wages were in line with the consensus. However, there was a downward revision to the prior months to one of the little things, but it didn't mean anything to anybody. Positioning ahead of the French election has been a big driver for the pair, because a lot of investors and speculators are getting in. They were buying up the pound, buying up the euro as low as they can get it because they're expecting it to surge. So they're taking big positions. A Macron victory nearly 2 weeks ago had triggered a gap higher in the currency pair. And with recent polls pointing in its favor, the euro remained bid ahead of the second round of elections scheduled for Sunday. And we should start seeing results soon. I don't know what time. I don't know exactly how French politics works, so I don't know if there'll be polls coming out or when the counting actually starts. Okay, somebody should look at that. But again, it's Sunday, so there's no markets really open. Now, so the next level up on the charts from where the euro sits is at 110.55. So that should be what you're looking for is the upside resistance. If it moves up to the 110 level, it should bounce below or bounce off or react at 110.55. The level held the pair lower in early and late 2015, which is the last time it's really been at this range, and was also respected on the gap lower the week of U.S. elections. Support for the euro-US dollar is at 109.11, which marks the spike low posted during the EU referendum. Okay, and that was just, back in July of June of last year. Now, moving away from politics for a short time, we have on Monday morning or late tonight, we have Chinese trade balance, and then we have Japanese consumer confidence. We'll come back and look at those in more detail. Now, remember, if you're trading the Chinese trade balance, what you should be watching is the Australian dollar, New Zealand dollar, possibly Canadian dollar. Look for gold. Look for oil. You want to look at the imports and export numbers on oil. Okay, those are the assets that should be moving depending on this report. Then we have Japanese consumer confidence. It's expected to continue falling to 43.7. That will give you the Nikkei and the yen crosses. So you might get a nice trade at the Euro JPY. Then on Tuesday, on Tuesday, we have the Australian Business Confidence Report. That's early in the morning, middle of the night, but that will affect the Australian dollar crosses. It shouldn't affect the markets at all. On Wednesday, we have Australian consumer confidence again. Watch for the Australian dollar crosses. Then we have a biggie out of China, which is inflation data, and that will affect Australian dollar, New Zealand dollar, the Chinese indices, okay, as well as effect on the Canadian dollar. The biggest effect immediately would be on the Australian and the New Zealand dollars. And then at 3:30 GMT time, we have the U.S. crude oil inventory, which has an effect on Brent and WTI oil. Thursday, I'm going through these pretty fast because we're going to come back and go over them one-on-one. Thursday, we have a big day in the UK. We have the UK trade balance in the morning. That's going to affect the pound and the crosses. It'll also have some effect on the FTSE. Then we're going to go to the Bank of England Super Thursday big rate decision. Of course, that's going to have an effect on the pound as well as the FTSE. And then Thursday afternoon, we have the weekly U.S. jobs unemployment, jobless claims, which shouldn't really garner any attraction at all this week after the drop in Friday's non-farm payroll report to 4.3%. Then on Friday, we get German GDP. That will have a good effect on the euro crosses, give you an effect on the German stock exchange. Might flow over to the CAC. But the DAX will be where the biggest result will be, and could have an effect if it's a big miss or a very big plus on the euro. And then in the afternoon, we get inflation out of the U.S. and retail sales, effect on the Dow, S&P, the U.S. dollar. Dow doesn't have any effect on gold. Then towards the end of the day, we get Michigan Consumer Confidence Report, and that will have an effect on the S&P and the Dow, very little effect on NASDAQ, and the U.S. dollar and the crosses. So the U.S. dollar did not have a strong finish the week despite employment rising by more than expected with a 211,000 job gain in April. The unemployment rate fell to 4.4%, its lowest rate since 2007. But wage growth remains tepid at 0.3% monthly gain. That's still a nice number. Don't misunderstand it. It's still a nice gain. Economists are confident that the reduction in the labor market slack will ultimately result in higher wages. As the job market dries up, because there's more jobs than there are people looking for jobs, the employers start offering higher wages to hire new employees, or they start offering their current employees a little bit better work because they don't want them leaving, because replacing them becomes a difficult matter. Now, there's very little inflationary pressure on the Feds, but the Feds seem to be set for a June rate increase, because later on Friday, this past Friday, after we had the jobs report, we did have a speech from Yellen. It was a private speech at a college, but she seems to be very pro raising rates in June. So we're looking at that again. Now we have this week, central banks of New Zealand and England will issue rate statements this coming week. The Reserve Bank will deliver its rate statement on Wednesday. Okay, remember that's the middle of the night for us if you're over GMT time. The Bank of England kicks off Super Thursday on the 11th on Thursday. And the two central banks are expected to hold, but the market will look to their press conferences. And this is where it's going to get icky at what they have to say. We'll talk about that more in a little bit. Now, Italy will host the G7 conference. This is where we might get some feedback out of, we're going to be discussing everything from, we should get statements, everything from Brexit to the French election to everything. It's going to be an interesting result. Now, we're going to also be keeping a very, very close eye on North Korea. And if the G7 says anything about North Korea, While Syria was the main talking point during the meeting between foreign ministers in the finance summit, will likely touch on trade with the Brexit process is underway, concerns about Donald Trump wanting to renegotiate NAFTA between U.S. and Canada. I mean, this man's just trying to undo everything everybody's done, and he thinks he can undo it in the blink of an eye and redo it in the blink of an eye. So we'll see what happens there. Now, oil has been a big thing on everybody's mind because oil has fallen extremely low. Now, oil did manage to advance 1.081% on Friday. Okay, little nothing, but that's because people were buying at the bottom because it was sitting down in the toilet. But it's still down $6.29% on a weekly basis. That's a huge decline last week. The West Texas Intermediate is trading at $45.83. They need that somewhere over $50. The lack of demand for crude and distillates has created a glut of supply despite efforts from the OPEC. Now, we're going to expect something out of the Saudis because they want to take their oil company public, and they need the price to be over at $60 to be able to sell what they want to sell or demand the price they want to demand. Because they're only selling off 5% at some kind of trillions of dollars, but it's all based on the value of oil. Now, the organizations work towards reaching a new agreement to extend the production cut deal that stabilized prices. But with U.S. producers increasing activity, it's questionable that even that could boost the prices. And Iran the Saudis are really fighting it out, and Iran is pumping as much as they can pump out of that ground. So it seems like no matter what the Saudis want to cut back, they're going to have to deal with the U.S. increasing production and Iran increasing production. Now, gold continued to slide downward on Friday. The gold is down 0.105% in the final day of trading. Okay, again, we saw very little reaction to the non-farm payroll report. Still trading, as far as I'm concerned, way too high. But that's being supported also by North Korea. I mean, we don't know what's happening. Trump is creating uncertainty, and North Korea is really upsetting everybody. It's keeping the stress level turned back up. The precious metal lost $3.09 in the last 5 days as political risk was downgraded after the French presidential debate solidified the lead of Marsan. But then with North Korea over the weekend arresting another American, that's going to be the tipping point. At some point, somebody's got to take some action. So once again, we saw the euro. Look at the climb of the euro on the 1st through the 9th, the 1st through the 5th. That was a nice steady climb from 108.93 to 109.99, and it's sitting right there at that 110 level. So again, we're going to see the results from this debate. So you're going to see some knee-jerk reaction. If we have a strong win, you should see it pump up to that 110 level. It'll probably ease back down right after it. But it could offer you a good buy for a quick turnaround, or you might wait till it pops out at 110 something and sell it because it's going to eventually fall back down. Now, this week, we start out with France being the #1 event this week. So we got that labeled #1. #2 this week is the Chinese trade balance. Now, in March, China reported the trade surplus of $23.9 billion compared to the surplus of $25.3 billion for the same period last year. The readings came in above the market expectations that the surplus would be about $10 billion. Now, this is the important part. If you're going to watch this number tomorrow morning or late tonight, is you've got to watch the balance between exports and imports. Because even if the number widens or narrows, you got to see where it was affected. Okay. Well, exports last month rose by 16.4%, following a decline of 1.3% in February. Imports increased by 20.3% after rising 38.1%. So when we see the narrowing trade balance, is because their imports are getting more and more and more. They're exporting just as much, but their imports are reducing that balance. Analysts had expected exports and imports to increase by 3.2% and 18% respectively. In February, China recorded a trade deficit of $9.99 billion. Okay. Forecast for April is a trade surplus of $35.5 billion. So again, it's very important to analyze imports to exports. When you look over imports and exports, you want to look at the oil figure also if you want to trade oil. Okay. Also take oil out of the number. Okay. And then compare the two. Then on Tuesday we had Australia retail sales. It unexpectedly decreased by 0.1% on month-to-month in February after rising by 0.4% in January. The reading for the month missed the market estimate. Okay, sales declined in household goods retailing and clothing, personal accessories and footwear retailing. On the other hand, sales rose in department stores and food retailing. Retail sales in Australia is expected to increase by 0.3%. A better than expected number isn't going to make the Australian dollar much stronger, but a miss would weaken the Australian dollar. And if you can combine this together with an outlook out of China, because Australia and New Zealand are the biggest trading partners they're Australia's and China's biggest trading partners. Australia and New Zealand's biggest trading partners are China. Then we also have the Australian annual budget release. It's not expected to have that big of an effect on the markets, but we're going to listen to what they have to say about what they have to say about borrowing and spending. So if you want to be up that time of day, you might want to give a shot at trading the Australian dollar. It's not going to have an effect on the exchange over there. Then on Wednesday, we get crude oil stocks for last week they dropped by 0.930 million barrels over the week. Okay. And had a decline the week before, but it didn't support prices. Analysts had expected crude stocks to fall by 2.33 million barrels. Gasoline stocks increased by 0.1. Now, remember, the number up and down in stocks is a knee-jerk reaction that speculators use because it all depends on how much oil is pumped in, how much was processed, where it's going, and everything else, because it's not really a production figure. It's just what's on hand every day. So, it's like if a grocery store had lots of meat on hand today because nobody was buying meats because they were waiting because they knew it was barbecue season. They were going to buy it on Friday. So Friday it sells out. It's a number that speculators have made important to the markets. Then on Wednesday night or Thursday morning, we get the New Zealand central bank's decision. And we're not expecting them to do any changes, but you never know with Mr. Wheeler what exactly he's going to do. Now, we're not expecting any change. In a meeting in April, the Reserve Bank of New Zealand is expected to maintain the official rate at 1.75%. Now, what we're going to listen for is his press conference, which is an hour later. That could cause some action in the New Zealand dollar. So if you want to trade the New Zealand dollar, and it will probably be a good trade this week if you keep an eye between the Aussie and New Zealand dollar. You have China, you have the Australian retail sales, and then you have the New Zealand central bank. All of those could keep that pair bouncing off of each other. So you might want to put your nose to the grindstone and do some work and maybe trade that volatility. Then we get on Thursday morning, before we have the central bank, we have UK manufacturing production. Now, in the UK, industrial production fell 0.7% a month to month in February after a reading for January was revised downward. Okay. So we've seen a drop in UK manufacturing. This is tying back to Brexit. A lot of manufacturers don't know what to do in long term. Lots of importers don't know what to do in long term. So it's going to have this midterm effect. Okay, but I think by June we'll be past all that and everything will be business as is until 2 years down the road when they finalize Brexit. So, but keep an eye on your manufacturing production expected to decline by 0.2% from March, which will be in the April report. Then we go to the biggie, Thursday, Super Thursday. We have the Bank of England releases, first they're going to release the inflation report on the quarterly basis, and the pound fell when the central bank published a dovish inflationary report in February, and they're probably going to remain dovish. In general, the message conveyed by the Bank of England was that the central bank is comfortable with the record low interest rates as the fall of the pound since the Brexit vote in June has pushed the prices up quickly. Now, the Bank of England is going to probably sit tight because they don't want to rock the ship at all. And if anything, they're there to back up the pound with quantitative easing if the economy starts to fall. But they're not ready to start raising rates. So a year or two ago, they were talking about being the second bank that would start raising rates, and they were expected to be raising them late 2016 and 2017. But nobody expected the Brexit vote to come out the way it is. So the Monetary Policy Committee for the Bank of England sets its interest rate with a view to achieve its 2% inflation rate, which helps to sustain employment and growth. At the last meeting, the committee voted 1 to 0 to 8 to maintain the interest level at 0.25%. Now look at it. There is 0.25%, and Bank of New Zealand is 1.75%. Where would you rather have your money? The committee also voted unanimously for continuing with the program of bond purchases. In the forthcoming, it is expected that the committee members would vote 009 to leave the official rate the same. But we could be surprised if they say something about cutting back QE. Then on Thursday, after the Bank of England, we're going to go over and we're going to look at PPI, Producers Price Index in the U.S., and final demand for producers' price fell by 0.1% month over month, and the basis analysts expect the reading to remain flat in March. Now, in the U.S., the first quarter of the year is actually a sleepy quarter, and then the second quarter is when the markets spark and come back to life. So we just finished January, February, and March. We're getting March's report here in April. Then we expect things to start producing through April, May, and June. Okay. Now, if it's a very bad number, it might weigh on the dollar and push gold down, but I don't think it's going to have any tradable effect. Then we have the U.S. unemployment claims report. It's not going to have any effect on the markets at all, like I said, because we had such a significant drop in unemployment on Friday's report that it was just Friday, and now we have the weekly unemployment report. So it's not going to be much to look at. We also have CPI, inflation. Now, this is going to be an important number. Now, consumer price fell the most in March over 2 years because of a sharp decline in gasoline and energy product prices. Now, with oil prices going down, gasoline prices and everything related to gasoline and transportation, manufacturing that ties to gasoline has been down. But if you look at this number and factor out the drop in energy prices, because energy prices can spike instantaneously. So we want to keep an eye on where the rest of the inflation is coming from. Because if the Fed see any inkling of an inflationary track, we're going to see them definitely raise rates soon. Okay, so we can look at core CPI, which excludes food and energy. Now, last month fell by 0.1%. CPI and core CPI are expected to increase by 0.2% in April. So we need to stay on that trail. Then we're going to get U.S. retail sales. We have a busy day on Friday. Retail sales dropped about 0.2% month over month. But we were kind of expecting it with Donald Trump coming in office. Nobody knew what was going to happen. Everybody was dealing with all these presidential orders, and tends to be when people aren't buying, when they're confused about things, they stop buying. Plus, we also had the drop again in gasoline prices. Gasoline is down, so is retail sales, because sale of gasoline is considered a retail sale. And then we go on to U.S. consumer confidence. University of Michigan Consumer Sentiment is the biggest, most well-respected report that comes out on U.S. consumer sentiment. Okay. It does have an effect on the markets. Okay. We're expecting it to be a little higher for March. It's staying above 96. It will be fine. It was 97 before. We had a reading in 98 a while back again. Because if we don't have the consumer confidence, then you have a loss in spending, which has a loss in manufacturing, which cycles all the way down. So we're expecting it to come in for the expectations for May at 97. And then on Friday and Saturday, we have the G7 meeting. Okay. They're going to discuss all kinds of events, including finance, growth, and regulation. Finance ministers and central bankers from 7 industrialized countries, Canada, Italy, France, Japan, the UK, Germany, and the US will attend the meeting. The meeting is closed to the press, but all the officials communicate with reporters. They're all looking for headlines. So again, this is over the weekend. If we can get a comment and statement at the end, it might have some effect on the euro and the dollar. But it's most of the time their statements aren't so, they're going to work together to help this. But we do expect them to focus a lot and have a lot of comments on Syria and North Korea. This will be one of the few times where geopolitical things and Brexit might be the focus of more than central banks action. Then the following week, we don't have much. We're going dead center of the middle of a month cycle, and it's always very quiet and dead center of the third week of a month. So all we have on there is the RBA meeting minutes on Tuesday, European GDP. Wednesday, we have the non-monetary policy ECB meeting, which has no effect on anything. And then on the Thursday, which is the 18th, we have unemployment change and unemployment rate out of Australia. That the jobs report out of Australia will be the only thing that sparks any interest the following week. Otherwise, it's going to be a quiet week. And then we roll over to the end of the month, the 22nd through the 29th, and then into the UK elections. And we'll cover those 2 weeks from now. So this week, you have a very exciting week, and then followed by a very dull week in the economic cycles. So when the market's dull on the economic cycle, we have lots of news and headlines that people are looking for, because they're looking for reasons to trade just about everything. So I'm just trying to go back to the calendar for you. So remember, Monday, early in the morning, in a couple hours now, we have Chinese trade balance and then Japanese consumer confidence. And like I said, it might give you a good cross there to trade the Euro JPY after we see the election results. Tuesday, we have Australian business confidence report. Wednesday, we have the Australian Westpac consumer confidence report. Thursday, on Wednesday, we also have Chinese inflation. And then later in the day, we have the crude oil inventory report. Thursday, we have UK trade balance. Then it leads into the Bank of England rate decision. And then we have US jobless report. Friday in the morning, we start out with German GDP. That's going to be an important number to watch. That will have an effect on the DAX as well as Euro crosses if it's a big miss or a big hit. Remember, Germany is the biggest economy in the Eurozone. Then we go over to U.S. inflation and retail sales, and then U.S. consumer confidence. And that is it for the next week to 10 days. But remember, the biggest thing out here is going to be the elections and then the Bank of England. And then headlines on Brexit and headlines on Korea. So thank you very much for joining us today. Good luck with your trading this week. Remember, trading the news has huge profitability but carries huge risk, because market volatility can wipe you out. So there are short-term strategies and long-term strategies. If you don't know how to protect your risk, you're better off taking a long-term strategy, taking advantage of where you think the result will be over the long term instead of trying to trade that short term. But if you understand risk and you understand how to set your market neutral, market positive, market negative results, look at that short term. If you're not sure how to do this, look for on the calendar for our class on trading the economics calendar, and we'll teach you how to build market neutral, market positive, market negative. We'll also try to teach you what difference between a long-term and a short-term trading strategy to trade economic events. So make sure you look that one up on our schedule for the month of May and June and come to that class. Otherwise, have a great trading week, and thank you very much for being part of the ETX family. And have a wonderful rest of your weekend. Good night now.